Let's get straight over to Steve Liesman. He's got some breaking news from the Fed in terms of what's been happening with that repo issue. Steve.
Yeah, Becky, thanks very much. The Federal Reserve, in another round of liquidity injection, just announced results of its auction this morning, and it was actually oversubscribed. $75 billion was accepted, but $80 billion was bid. And the stop-out rate, which is the lowest level expected, coming in at 2.1. This is much better behaved than it had been. The weighted average, 2.2 on treasuries, 2.24 on agencies, 2.26 on mortgage backs. I don't know if Rick has a comment on that. What I heard this morning from a couple traders is that we came in, we opened 3 3/4, went up to 4.5. Now, remember, the reason why that's a big deal is because the Fed's trying to set this rate between 2 and 2 1/4. So you had much more demand, and it had settled at 2.6 earlier this morning, and now it looks like the Fed took this on and put liquidity in the system. Seems like it's close to enough, about a $5 billion differential there. Some traders had told me that if there wasn't enough, the Fed might come in and do another operation. I didn't hear that from the Fed, just other traders expecting it. But it seems like for the moment, the Fed is at or close to its rate, what's trying to set.
Good. Hey, Steve, doesn't this really underscore that the topic of conversation today by Jay Powell and company should be about the balance sheet and quantitative easing? Now, I'm not saying I am looking to make an opinion on either, but lowering 1/4 of a point, lowering 50, lowering 75 would not have changed the conditions of the short-term funding market over the last 48 hours. Would you not agree with that?
Oh, definitely. In fact, it might have had an effect where people were holding off a second. You know, Rick, the Fed could come in, something other traders have suggested to me, and do a longer-term operation to kind of put this stuff to bed for a little bit longer, but it wouldn't do so with the Fed about to cut interest rates. So that would be a troubled operation. Look, people have told me that the New York Fed did not handle this well, that they should have expected this. Things like the tax payment September 15th, the regulatory changes that have forced banks to hold on to more reserves and made a scarcity of them is something that the Fed can and should have done something about. So we're going to see whether or not the Federal Reserve takes some action to get control of its primary tool, which is its overnight interest rate.
You think they should lower rates today?
My opinion?
Yes.
I'm betwixt and between on this one, Ken. I look at the data. I think it's pretty good. We had inflation data last week that on a 3-month average was topping 3%. We've had wage data, which on a 3-month average annualized rate, topping 4%. We had good industrial production the other day. Prospectively, I don't think there's a lot the Fed loses on this 1/4 point. Personally, I would have preferred the Fed hold its ammunition for when things get more serious. The market pressured them. The ECB pressured them. I think that's an argument. And, of course, as we talked about in the last hour.
I'll say no. Ken, I'll give you a 1-word answer. No. Matter of fact, I'll give you a 2-word answer. Absolutely not.